Yo, what's going on, guys? It's your boy, the Credit Dude. Happy Monday. Today's May 12th. And I wanted to come to you guys to talk to you guys a little bit about one of the biggest myths that I hear a lot. And I think it deters people away from not only fixing their credit, but applying for a mortgage, building business credit, and just doing other things with their credit. So I wanted to debunk one of the biggest credit myths that I've seen and that I hear about, which is, you need perfect credit to buy a house and or build business credit. So today we're going to talk about both of them because right now in 2025, I know there are a lot of people that want to buy a home. Rent prices, depending on where you live at, are at an all-time high. And sometimes it doesn't make sense to rent depending on your situation. But, if you can save money and put yourself in a better position to apply for a mortgage, there are obviously a lot of... Zoe, she's snoring. Come here, Zoe. So there are obviously a lot of programs out there that can get you some down payment assistance and even some closing costs, help you with some closing costs, some seller concessions, and things like that. All right, guys. So let's dive right in, just so that way we can go ahead and knock these out and let me know, like, if you have questions on this, or if there's any other myths you want me to debunk, or if there's anything that you want me to talk about, because I think it's important to know the truth. My name is Jose Rodriguez. I've been in business 15 years with a company called Got Credit. Me and my wife Kelly have owned the company, and we've been educating consumers all over the country for over 15 years. We've helped thousands of people. We've spoken in front of thousands of people, and I love what I do as a former Marine. Once a Marine, always a Marine, but as a veteran, I do love even educating veterans. I've spoken in colleges. I've spoken in home buying seminars, real estate seminars, high schools, elementary schools, all over. And debunking credit myths is one of the things that I enjoy because I get to explain it from my point of view, and it's not AI and it's not a textbook or an online website that just explains something to you. And sometimes you might leave without really even knowing if the myth is still a myth, or if it's true, or if it's false, or whatever the case is. So I wanted to bring you some information just so that way you have a better understanding. And like I said, let me know what myth you would like me to debunk next, and I would love to help you out. All right. So number one, how your credit affects the home buying process. So I am on my second home. I bought my first home in 2017 using my VA loan. Even though I did credit at that time for 7 years, still a little bit lost about the process. And when I bought my second house in 2021, still not a mortgage expert. I'm a credit expert. It's two different things. And also a real estate expert, three different things. Okay. I did surround myself with people in the mortgage industry and real estate industry that were able to assist me, as well as having a great attorney as well. Shout out to Aaron Liller, who helped me with everything in the process. So if you need a real estate attorney, make sure you reach out to Aaron Liller in New Jersey. A great guy, and helped me out a lot. So, a lot of people think that you need a perfect credit score. And honestly, guys, a perfect credit score is not required when it comes to purchasing a home, regardless of what program you're in, okay? And it is one of the biggest misconceptions. A lot of people think, I need a 700 credit score. All my debt has to be paid down, and I'm never going to buy a home. I might as well just keep renting because it makes more sense. And, listen, it's okay. It's understandable if you feel that way. But in reality, you can buy a home with a credit score under 700. Okay. Yes, it is possible to buy a home, but to get approved for a home, for that matter. Okay, with under a 700 credit score. All right. So FHA loans, which are your more common loans. Okay, this is what a lot of people are going to put 3.5% down. And if you're using a VA loan, you can use zero money down. And they typically will go down, and you can qualify with as low as a 580 credit score. Now, just know that with a 580 credit score, your interest rate will typically be higher. I believe that your mortgage lender is going to ask for more things in underwriting. So if you are a mortgage lender, and if you want to give more information about this as well, when FHA, VA loans, please comment below, give your information. We would love to, if you're a lender that can help out clients all over the country, let us know what state you're in, and and where you can assist from. So like I said, even if you're at a 580 mark, you could typically get approved at a 3.5% interest, but you might need a large down payment. There also might be programs available to you depending on what state you live in, also depending on which county you live in, what city you're in. I believe that there's something called low to moderate income LMI programs where you can get assistance with your down payment, you can get a grant. There's a lot of things out there, guys. So the first thing, obviously, you want to speak to a mortgage lender in your area. There's a lot of networking events. There's a lot of NACA programs. There's a lot of, housing authority programs. Don't think that just by going on the internet that you're going to find all the answers you need. You are going to need to surround yourself either with a local real estate agent or a local lender to answer all of your questions. Okay, I think that's very important for you because you might be, you think that you might never be able to own a home, and who knows, you might have been able to buy a house 5 years ago. Now, the interest rates are a little bit different, but if you're looking to buy, it's okay. Now, also with conventional, your credit scores typically need to be higher than a FHA, VA loan. And also there's like non-QM loans where, the guidelines are a little bit different. But you can still be in the 600s with a conventional loan. Typically you want to be over that 660, 680, 620. Really just depends on what type of loan you're trying to get, what they're trying to approve you for, what the stipulations were. So everything is a little bit different. Interest rates may be a little bit higher if your credit score is lower, of course. But, you are going to be looking at the 5, 10, 20% down range. So depending on what type of house you're trying to buy, the amount obviously depends on your income, of what you qualify for in the area you're in, is ultimately going to depend on how much you're putting down. So just keep that in mind, okay? But, the one thing that I have seen is that lenders do look beyond credit. Lenders do look at other things other than just your credit score depending on your situation. Maybe your debt to income ratio is really good. Maybe you have a larger down payment. Maybe you can get a gift from a family member. Maybe your job stability is a little bit different. So you're able to show different things. And this is where underwriting is definitely going to come into play because, everybody's situation is different. So like I said, make sure you reach out to a lender because they'll be able to answer a lot of these questions for you because it is not a cookie cutter program, a situation, all right? Now, too, I did want to talk about now building business credit. A lot of people think you need a 700 credit score, 800 credit score when it comes to building business credit, and that's not true. A lot of people think that business credit is just American Express, Visa type cards, MasterCard, Chase Inc., things like that. Now, even those are good. Those are really good credit cards to really put you in a good position long term. If you are looking to build business credit, there are things that you could do in order to build your business credit profile in order to, build a little business credit while you're fixing your credit, while you're rebounding. We do have a lot of clients that have low credit scores and are still able to build business credit in the God Credit Academy because there are things like Net 30 accounts that actually will approve you based off of the strength of your business credit profile, and especially if you have your DUNS number set up, you'll be good to go. Okay, now your business credit is separate. So you have your social security number, which is for you personally, and then you have your EIN or your tax ID, which is for your business. Okay, and if you don't have your EIN, you can go to the IRS website. Zoe, come here. Zoe, come here. Come here. Come on. She's snoring really loud. Okay, so if you do have it's my bulldog Zoe. I have 3 bulldogs, Rosie, Zoe, and Louie. All right, so business credit does allow you to separate your business credit profile where you can get certain accounts and certain Net 30 accounts just using your EIN. And then there are going to be situations where you might have to use your personal credit as a guarantee and or just to verify who you are, but they won't always pull your personal credit. Okay, they won't always pull your personal credit. So every situation is different. So just keep that in mind because there are certain vendors and there are certain credit accounts that will not require you to put a personal guarantee, but they might, One of the things that I like to see people doing with business credit is secured business credit cards. So Wells Fargo does have a really good program for this. And also, if you don't have NAV, I have a link below where you can sign up with NAV and you can monitor your business credit and it'll allow you to build your business credit at the same time. So that's a good thing. You can build business credit monitor your business credit, and then you can get the NAV Prime card, which is an unsecured card, typically based off of your bank revenue. And you can start off small with like a $250 limit and work your way up, and they'll also report that payment. Next thing you know, 30 to 90 days, you have your business credit profile established for all 3 business credit bureaus, and you'll be in a good position down the road. Now, this is one of the things that I think a lot of people miss, and a lot of people don't realize is huge. Depending on your industry, you probably are already buying certain things from certain vendors or certain people in your area or certain creditors that you already use. And you might either be paying cash with a credit card and or paying them without even realizing that they offer a net 30 account. A net 30 account is something that you could get approved for, and you don't have to make a payment for 30 days. Okay, sometimes there's net 7 or net 14 in the food industry. But if you are already doing business with certain vendors or certain people, even in your local community, ask them if they have business credit terms and or net 30 terms, because that'll help you a lot with your cash flow, and it'll allow you to do certain jobs to be able to do certain things. Now, some of my favorite net 30 and or business credit accounts, depending on what your industry you're in. I love Home Depot and Lowe's, Costco. Those are some really good ones, especially if you're a contractor and you need to buy material. Lowe's and Home Depot will really do a good service because you can buy some material and then pay down the road once your job is done. Okay, so number 3 is the truth behind what lenders really look for. You know, a lot of people think that lenders just look at a credit score, and I can tell you that that's not just that's not the answer. You know, your credit score is just one piece of the puzzle that people look at. Okay, and even though it is one of the strongest factors in the decision-making process, like I said, lenders in the mortgage space and in the business credit space are going to look more than just your credit score. They're going to look at your debt to income ratio, which is how much money you pay monthly on your credit report to how much money you have coming in on verified income. Okay, so that ratio is going to be dependent upon how much you're paying personally, how much you're paying for your business, et cetera, et cetera. Okay, and they're also going to look at other things like your savings. How much do you have as a down payment? How much collateral do you have? Was this a one-time thing where you had a couple late payments in or collection, or has this been a pattern for years? You know what I mean? So they could determine that in underwriting. All right, and I think that's very, very good because, you know, your credit utilization, which is how much money, pretty much how much debt you have and how much money you owe on your credit cards. This is a huge thing. If you carry balances for a long period of time on your credit cards, this is going to hurt you. Okay. You don't really want to get into the habit of carrying large balances on your cards and applying at the same time. Now, listen, don't get me wrong. I've been there. I've had maxed out credit cards, and it's not the best. It's not mentally, it affects you a lot mentally. But at the same time, don't apply for anything at that time too, because you know that they're going to ask you, hey, how's your credit? And, oh, everything's maxed out. Then you got to explain, and you're going to get denied. And it's just so, I would advise you that before you do any of this is to make sure that your credit utilization is at least under 50%. Obviously, if you're above 50%, you can explain some things, but total overall, and I'm just really talking about credit card debt. So if you have total $20,000 of available credit, make sure you're under $10,000 overall. You know, depending on which credit cards you have available, you might be over the limit on one and still be under the $10,000 overall. But try to be overall under $10,000, and if you can, try not to have any maxed out individual credit cards, because that also looks bad too, and it does affect your credit score as well. Okay, so your payment history is also important. So you might have a low credit score because of debt utilization, but you've never had a late payment. That might be something that a lender might overlook, because they're like, wait a minute, you've never had a late payment, you've never had a collection, you've never had a charge off, you have really good pay stubs, you've been at your job for X amount of years, you're self-employed, and you know, you just have these high balance credit cards, but when you get approved for this mortgage or this credit card or this loan, it's going to put you in a better position. So let's go ahead and approve you. So like I said, guys, every situation is different. So don't disqualify yourself. Let a mortgage lender and or a business credit professional of who you're applying with be the person that denies you and come up with a plan. But I can tell you that these are some of the things that you can do on your own to be prepared for when they ask those questions of what X, Y, and Z is, you're able to respond and be that much more ahead. And they're going to be like, okay, this person knows what they're talking about. And they're going to be a little bit more confident with borrowing, with allowing you to borrow money without a perfect credit score. Okay. So, and like I said, one of the last things is don't just focus on the credit score. Okay. You don't need perfect credit score for either of these, buying a home and or building business credit, but you still want to be in a good position. So just make sure that when you do apply for the loan or the business credit, that you still have a solid game plan for any and everything that's on your credit, okay? Number 4, these are some key steps you can take to start improving your credit and financial health. So I want to give you some things that you can do. Already mimicked or said them in my, previously in this video, but it's just to kind of recap, to kind of refresh, to kind of give you a game plan now. You can kind of write these 4 things down. And I promise you, if you do these 4 things over the course of 6 to 12 months, whether you're not able to buy a house right now, or you're looking to buy a house down the road, and or you're just preparing yourself, I promise you that if you do these 4 things, you will be that much better and you'll be ahead of the game and just, mentally just be okay, Number 1, check your credit report. So I would recommend you going to gotcreditmonitoring.com. So www.gotcreditmonitoring.com. There, you can either pull Identity IQ or My Score IQ for $1, and you can put your credit report. You can see what's on there, see what lenders are going to look at. So if you do the My Score IQ, there is one that has the industry scores, where it's a FICO scores for like auto, for credit cards, for mortgages. And you can kind of see like the scores that the lenders see, and you'll be a little bit more ahead of the game as well, because you'll see what scores they pull. Now, if you go on Credit Karma, that's not what they see. You know what I mean? It's a little bit different. I'm going to make some videos on Credit Karma as well, because it's not a bad thing if you check Credit Karma, because you do get good alerts, but just don't use that as your main source of credit score information and or credit report information, because they only have Equifax and TransUnion. They always miss Experian. So, back in the day, they only had TransUnion. So they actually stepped the game up a little bit. All right. So see where you're at. See if you have negative items. And if you do, you can hire Got Credit. You can go to gotcredit.com. We would love to help you out. We do help you with the credit repair process. We educate you. You get one-on-one guidance with a credit coach. We help you with business credit. And we kind of come up with a little bit of game plan for you for whatever it is you're trying to do. Okay, we tailor the plan to whatever it is you're looking to do, okay, in the next 6 to 12 months. Now, start with secured business credit. If your credit score is not great, like I said, you can get $500, go to Wells Fargo, get a secured credit card. You can go to NAV, get the business credit monitoring, get the NAV Prime card, get some net 30s, go to Lowe's, go to Home Depot. And, another thing too, guys, get some gas cards. Gas cards in your local area is another great way to build business credit. And you'd be surprised at, how much money you spend on gas, and you can kind of itemize and separate some of your expenses, okay? Now, the third thing is with this, okay, you have 1, check your credit report, 2, start with secured business credit, and number 3 is pay down existing debt. This will always put you in a better position, credit score-wise, and mentally, it'll always be better for you. So if you can pay down any of your debt, guys, it might mean that, you know what, I'm not going to go ahead and go to that game today. I'm not going to go to the club this weekend. I'm not going to buy these sneakers. I'm not going to buy these shoes. I'm not going to, I'm not going to go here. I'm not going to take this trip. I'm going to cut some expenses when it comes to paying for lunch. I'm going to make my lunch at home. I'm going to make my coffee. So everybody's situation is different. But I'm telling you this, if you can cut certain things a week and you can save $100 to $200 a week, that ends up to being $400 to like $800 a month. It could end up being $1,000 a month. And depending on how much credit card debt you have, you can knock out some of your credit card debt in 3 to 6 months and just be that much better. Start a side job, do Uber, Turo, start a side hustle. You do whatever you want, do whatever you need to do to save money, stack some of your money, pay some of your debt off, and really look to see what it is you're trying to do, because at the same time of you paying debt off, you also want to be saving money. You want to build a little bit of reserve as well, just in case a lender is going to require some down payment. All right. And the most important thing out of these 4, okay, 3 was paying debt down. Number 4 is make sure you're paying all your debt on time. I think the biggest thing that I see people doing is having a late payment for a $25 credit card or $100 credit card, and they had the money and they spent it somewhere else. Listen, the only person that is responsible for paying on time is you. Okay, the only person that can control a late payment is you. Now here's the thing, I've been there. Sometimes you don't have the money to pay it, and that is something that you cannot avoid, and that is something that you cannot control, okay? The best thing you can do is pick up the phone, call your credit card company, call your auto loan company and say, listen, this month is very bad for me. I'm not able to make a payment. Can you help me out? Can you put me in forbearance? Can you double up next month? Whatever you gotta do to prevent a late payment, prevent that late payment. I promise you, long term, it is going to help you out. Don't just think, oh, I'm gonna just let this go. I'm gonna let it go charged off. I'm gonna go. Telling you, long term, it will affect you. Do every single thing you can to have no late payments, okay? Because like I said, long term, it's gonna be better for you, all right? So number 5 with this, okay, is the importance of a long-term strategy. I always tell people that building business credit does take time. Yes, you can build some business credit over a 30 to like 90-day period and even a 6-month period. But long term, the real magic happens when you're on time with your payments and you're consistent and you're paying your debt down. Because listen, there's no point of you building business credit if your personal credit habits that you've had that led you to having bad credit are not fixed, and then now all you're gonna have is bad business credit, okay? And when you try to get a car, you're trying to get stuff in your business name, I'm telling you, it's not gonna be a pretty scene when you have bad credit and then you also have bad business credit, and then it's just 2 whammies against you and it's not good, all right? But I can tell you, do not wait for the perfect credit score. Whatever it is you're trying to do, one of the easiest things you can do is have a lender run your credit, have a business credit banker run your credit, see where you're at. You can build a business plan with them. Like I said, we're here to help you out with whatever it is you need. And then just take action today. Whatever it is, take those small little leaps, take those small little steps, and take those small actionable tasks that would lead you to what it is you're trying to do. Now listen, you might get approved right now for a house. It ain't your dream house, but at least you bought a house. Down the road, you can sell it. Down the road, you can rent it out. Down the road, you'll be able to make money out of it. And down the road, you'll be able to either refinance when your credit is better. You can put a tenant in there when you're able to, get another house. So depending on what your situation is, you really need to speak either to a real estate agent or a lender that can know your market and know really what to do to put you in a better position as well. Like I said, if you have negative items, Got Credit is here. If you need a lender, we can refer you to someone. But like I said, if you're a lender yourself, comment below if you're a realtor, and if you can help anybody out with their financial situation, make sure you comment below because I think it's very important. So remember guys, to end this video, you don't need a perfect credit score to either buy a house and or build business credit. You could do it. I believe in you. I have faith in you, but the first thing you got to do is, do you have faith in yourself? You have the discipline in order to tackle some of these goals that you have. And really put yourself in a position to when you do apply, you have the answers, and you're just like, I don't know whose late payment that is, or that credit card, or this collection, or whatever the case is. All right, guys, very important that you know what's in your credit report, and that's why going to gotcreditmonitoring.com is going to help you out with knowing everything. All right, and just stay consistent, be patient, make small little steps towards those big goals. Change some of your financial habits because only you can do that. We can help you and we can guide you and we can give you all the advice, but until you actually buckle down and make those financial decisions and change those financial habits that can lead to long-term success, that's where the true magic happens, all right? So remember, your credit is a tool, not a barrier, and there's always room for improvement. I think that's powerful. Just like going to the gym, you might slip up and you might fall down and you might gain a little bit of weight or you might not be able to do that push-up, but the great thing is you can always rebound by going to the gym, staying consistent, eating a little bit healthier, and just being a little bit more consistent. And it's the same thing with your credit, all right? So got a couple call to actions for you guys so that way you can take action today and see where you're at. Number 1, go to www.gotcreditmonitoring.com, check your credit, see where you're at, see what you need help with. You might not need credit repair, you might just need to pay some of your debt down. But before you go to that lender, you can let them know, hey, listen, I know before you're on my credit, it's going to be at a 640. I have 2 collections. I have this on there. What can you do? And they'll be able to guide you and let you know obviously the game plan, all right? The second step I want you to do, the second thing I want you to take action on is start building business credit. So you can go to the link below and get NAV credit monitoring for your business, which like I said, it'll help you build business credit and it'll help you get a secured business credit card for your business, so that way you'll be that much more ahead. And obviously, the last thing I want you to do is ask any questions in the comment section, okay? Make sure you like and subscribe to this video, all right? Because, you know, if you subscribe to my channel and you like this video, it'll help me out with getting more information to you. But when I have a new video, you'll be like, oh, wait a minute, I had a question on that. Let me comment. I'll make sure I reply, getting the answers over to you, so that way you just have a better understanding of these myths. And like I said, the first thing is what I said in this video is whatever myths you have that you want me to debunk, comment below, and I would love to help you out. All right, guys? Zoe's tired. She's ready to go to bed. I'm ready to go to bed. I'm ready to knock out some more emails. So if you have any questions, comment below. If not, I'll see you in the next video. Peace.